Joining us with further analysis on these moves is Sam Houlie from Differential Capital. Sam, good to chat to you. Wow, what a volatile market scene we see today. You heard there, Asia down, Europe down. We're a little bit different, but certainly this war in the Middle East has put the cat amongst the pigeons.
It has. Our market is a bit of a bifurcated market in the sense that we have a big concentration in commodity-related stocks, especially gold. And because of that, we flat because, the gold sort of propping the market up versus the rest of the market more in line with Asian markets. But yes, this is quite an event for investors and just, humanity to work through.
Certainly is. I mean, look, oil, looking at Sasol as well. Sasol's been on this roller coaster ride, and now, of course, they're benefiting because that price has been going up. This morning, when I woke up, it was sort of $73 for Brent crude, now almost 78 thereabouts. So Sasol benefiting. So again, there's something in this for South Africa, I suppose.
Well, quite a few things. So firstly, the first order effect of something like this is energy and oil because it is the Middle East. And we can see that in energy markets and Sasol in particular. But I think that the other effects are you probably see gold as a safe haven just because of the uncertainty. And then shipping rates will also go up. We don't have many of those type of stocks in South Africa, but shipping rates will also go up given the fact that there's some uncertainty in terms of how ships will flow and product will flow in the Middle East. But all else being equal, I think the issue really is the scope and the duration of this, which is still uncertain, I have to say. We don't know how long it will last. We also don't know how it could be resolved. There are a whole lot of permutations on that. So we'll watch and see. Today is an easy day to almost predict, but I think that we'll see how the week unfolds.
Yeah, let's just see what happens there. All right, let's take a close look at our markets. MTN, I mean, those are lovely figures that they've come out with. Of course, they've got Ghana, they've got Nigeria, and things are working for them.
Yes, it is. And before we talk about the results, and they were phenomenal results, the share price has doubled in the last year. So the market, as always, goes way ahead of the result. And in a way, this is confirmation that the market was correct. Ghana and Nigeria, starting with Nigeria, phenomenal result, very strong, good dividends flowing through to MTN, and then Ghana as well. So I think the outlook's really good for them because of Nigeria and Ghana making up close to 60% of the underlying operations. A little bit tougher in South Africa for MTN, but overall a phenomenal result.
Yeah, massive, massive. All right, let's talk about Italtile. Sort of disappointing for them, their H1 results. They're battling also with counterfeit tiles. The market's difficult.
Very difficult. I think the issue with Italtile is that Italtile is in an area of the market that normally lags. Discretionary spending on tiles, as you know, you're really spending that money when everything else has been taken care of. And in the context of this environment for Italtile, it's actually a strong result, with revenue flat and a very strong balance sheet. But they're up against it, really. The tailwinds is really around discretionary spending in South Africa. And our economy has to be really strong with lots of disposable income before people will start spending in their markets. So a good result in the conditions, but tough outlook for Italtile.
Yeah, absolutely. People just don't have that extra spend at the moment. All right, looking at Bidvest, they've got their hygiene program, and that seems to be working for them.
Yeah, Bidvest is interesting. So it's a fairly decent result, 6 to 7%, but it's not phenomenal. It is a strong result. They are themselves deleveraging. So I would say a reasonable result, but it's almost as though they really need to plow their way through before we really start to grow. The one thing that's interesting about Bidvest, in their result, they spoke about the positives, very optimistic about South Africa. So notwithstanding Italtile's outlook, which is tough for discretionary spending, Bidvest have in fact made the comment that there's a lot of positives with interest rates low, inflation coming down, and early indications that the South African consumer is improving. So I would say that the outlook from Bidvest is optimistic for the economy, but not for Bidvest itself, where I think they probably just keep growing at 6%.
Yeah, no, absolutely. But that's them, like you say. RCL Foods. Now, there's this sugar problem. We've seen it with Tongaat, Houlie. They've raised the flag saying cheap sugar coming in. We're battling. RCL saying the same thing.
They are. So the result was very noisy because, obviously you had Rainbow going out. And the grocery and baking business did fairly well in a tough environment, but the sugar problem is a real problem. I mean, we know that Tongaat's in business rescue. So there are three things that are headwinds for sugar businesses. The first is the world sugar price is coming down and declining. The rand is strong. And then lastly, they have a bit of a problem with tariffs in the sense that it's a headwind for tariffs. It's not finalized. They're trying to fight it. So when you have a triple headwind, it's really a horrible place to be. And sugar is such a fairly big part of RCL now. So I would say this is a business that's just fighting to survive very difficult conditions. And we're certainly not a stock we own. And we won't be owning it for a long time until these things change.
Sure. You see, that's so very interesting. All right, Sam, where are you hanging your hat at this hour on this lovely Monday? What's your stock pick?
Well, the stock pick is a Canadian-listed mining company, Lundin Gold. It's part of the Lundin family. It's an actual family that really invests in natural resources, metals, energy, and renewables. And Lundin Gold is really a proxy for gold stocks all over the world, in the sense that the gold price, as you know, is now today, touching on $5,400 and close to its previous peak of $5,500. The costs for these businesses are around, and certainly Lundin Gold is around $1,100. So you can work out if your selling price is at $5,400 and $1,100 is where your costs are, that margins are expanding. So gold shares all across the world at the current gold price are generating huge amount of cash. It's a cash flow story. It's a growth story. It's an exploration story. And the market continues to disbelieve the story. And so we would say that in South Africa, where gold equities make up 20% of the SA equity market, that investors really need to relook at this, because you have to almost fight the disbelief in a way, because the underlying earnings are so strong.
Yeah.
And Lundin Gold and all of the South African management companies, gold companies, are acting really well, using that cash flow to explore more ore bodies and to return cash to shareholders. So gold, I would say gold and precious metals is the idea, and Lundin is just a proxy for that.
Yeah, beautiful. Very interesting. Thank you so much, Sam. Do appreciate you taking the time. Thank you. That was Sam Houlie from Differential Capital.